You about a trade that I took today, EU trade, and how we hit stop loss. And it was a valid stop loss, honestly. I'm not upset about the stop loss, actually. It was one of those stop loss that happened simply because we did not, we followed our rules, but we didn't follow it to the T. We missed one thing in our trade confluences that led to this stop loss. And I'm going to talk to you about it today. It was a phenomenal trade, and I want you to see it. So here we go. So first thing first, quickly, all I did was go to the daily and I looked to see what the market did. We see that we had a major inducement here. We had this low that led to this high. Structure was broken. Retracement, we mitigated, failed to tap into this daily demand. We broke down again, another break of structure, another break of structure. So we know that we are in a bearish market. Okay, so what what goes to say we don't really got to explain. You can see that we're in a bearish market. Cool. So what we're looking for is nothing but sells. Now we know that we're in a retracement. There's this trend line here, etc. But we're gonna see what price is doing. So quickly, I'll go to the 4 hours. Actually, before I go to the daily, let me show you what I'm looking at once again. I looked again. I see this the last previous thing that happened. I see we had this break of structure. Price needs to retrace. How does it need to retrace? Because this low led to this. I mean, this high led to this low. This low led to this high. Broke structure with a body. So we need to retrace somewhere to these to a discount level before we push up again. So how did price confirm that the retracement might begin? So I see here this last daily high was taken and price closed a wick in that zone. So what does that tell me? Bearish intention, bears are in control. So I'll go to the 4 hours. Okay, quickly, what does the 4 hour tell me? This low led to this high that mitigated this imbalance. To the left, we had a level of imbalance right here from this high to this low right here. One candle, two candle, three pattern candle. So we have this level of imbalance right here that price has mitigated. So we can say, okay, price is reacting from this imbalance to push down. Now this is the 4 hour. So this 4 hour high led to this 4 hour low. This 4 hour low led to this 4 hour high, broke structure. Before that, you can see we were in this bullish push right here. This was the bullish push in this channel. So what we do, first thing we say is, well, if this 4 hour zone is being pushed, where is the discount? Where is the discount that price could be retracing to before pushing back up? So we use our fib tool from the low to the high, and we can see that this is our discount range, and we can see we have a high time frame for our demand. So I'm going to quickly jump down to the 1 hour, and I'm going to use the bar replay so we can jump straight into how the market came about for us. So from the 4 hour, once last time, we know that we're in a retracement to these levels, and we can see that price haven't even reached the 50% range yet. So this is me coming into the market this morning. Again, I was running some errands, so I got to the market like around 9:15. I stopped at a coffee shop to join the market. I didn't even join the market from home and my desk or anything like that. So from the 4 hour, I said, okay, well, look, we haven't reached 50% discount level or the 6.18. So you know what? I'm looking for sales. I'm looking for sales. Price reacted from this wick, which has a lot of information in this wick, and it's pushing down. Let me see what's happening on the 1 hour. I'll get to the 1 hour. I see that, okay, what do we have on the 1 hour? I could delete this now. This was where the previous day high was taken. See that price broke structure with a body on this way, on this candle. So I know that eventually we want to come back up, which is confirming my overall analysis that we have to retrace to discount and continue up again. Why? Because on the 1 hour, we have this break of structure telling me that. Okay, so I say to myself, okay, what's happening? I see that this high led to this low. This low led to this high. That's what a BOS happened. The same low that led to this high that broke this structure, that high after mitigating the imbalance led to this low and broke this structure. So that tells me that, okay, buyers are no longer in control. This is where the sellers are taking control. So now, more reasons why I want to sell. Okay, I see this mitigation here. So let's go to the 15-minute now. At this point, I already have everything that I need to know. I know I'm selling, and I'm just looking for where my sell is going to happen at. Okay, so I see price came back, mitigated this 15-minute supply, tapped into it, pushed down. When I look to the left, well, before this mitigation happened, where is price coming from? Oh, okay. See, we have a demand right here. This is where price mitigated and is respected, had respected. So I asked myself, what demand is this? It's a high time frame demand, but what is it? What did it do? Oh, okay. So this was the decisional that led to this break that broke this high. The 4 minute low that led to the 4 hour low that led to this overall high. This was the previous higher high that it break. The break happened from this decisional that decided to push and break the zone because this high didn't. So okay, so this is my extreme, this is my decisional. Now we know price can either go off the decisional or go off the extreme. But because the decisional was above 50% in the discount range, I know this decisional will fail. My confluences are continuing to build for while I'm looking for sales. Perfect. So I'm looking for sales. So I get to the market. What happened? Because I'm trading New York session at this time. So what happened? What do I notice? Okay, price came in and tapped into this 15-minute demand also here, whilst respecting this previous 15-minute demand. Interesting. So I say, hmm, so this low led to this high led to this low, which did not break this. I have equal lows here. So I know I have all the reasons why price needs to come take this range. And on top of that, all this mitigation, this is telling me this is retail levels of retail support and resistance. So I know that my sales are going to be here for sure. So I'm interested. I'm curious to see what's happening. Okay, so when price this low led to this high, gave me a trade of character. So I said, okay, so I have a trade of character. I have a trade of character here. This low gave me this high, gave me a break of structure. I'm still with you, price. Okay, so we breaking structures now. What did we break structure to? Okay, we break structure to mitigate this high time frame supply. Okay, now does that mean that buyers are in control? Currently, it's telling me that until I look and I see this high led to this low and broke this structure. Now, this was the low that led to the high that did the mitigation. So now sellers are back in control to me. Perfect. So now my sell is valid. So I said, well, if I'm going to sell, I can't sell at the bottom right here. Price has to come back to sweep some sort of liquidity for me to sell from. So I say, hmm, I could either wait for price to come to a zone, perhaps maybe this zone here at the time. I said maybe this zone here, perhaps, and I could sell from, or maybe this imbalance. There's levels. So I go to the 5 minute. I said, okay. Now this zone that I was interested in, it looks like it's a consolidation zone. It looks like price is just waking candles and waking. So I'm like, I don't think I want to sell from this zone no more. So I deleted it. I said, I don't want to sell from this zone because it looks like it's consolidation. Above it is an imbalance. It's a 15-minute imbalance right here. As you can see, one candle, two candle, three. From this wick to this wick, we have this level of imbalance right here. So I'm like, okay, that's imbalance. So I probably don't want to sell from that zone. Price might wake above it just to take out the imbalance. Okay, this is a consolidation zone. Price might come take this. Okay, now, before I continue to show you what happened, because you see this level of equal highs, it will show you where it happened. I want to show you my trade confluence list. This is where I said I followed all my rules except for one, and it cost me. I missed out on 6K, chasing 9K, ended up losing 1K. Let that marinate. I missed out on a 6R trying to chase a 2.53R, more like a 3R. It was a 3.5R, trying to chase a 3.5R, knowing that I want to sell, but I was chasing a buy that would give me 3.5R to then sell. So here we go. So I come into the market. I said, well, here's my trade confluence. Let's read it over our trade confluence. I come into the market. First thing I ask myself is this: am I in a continuation or a reversal? All right. From the 4 hours that I explained to you, I could see that I was in a continuation because the market's been bearish. Cool. We haven't had a medium inducement. I don't need to say that I'm in a reversal. Secondly, I say, number one, it has, for me to enter a trade, it has to be time-based manipulation. A time-based mitigation has to happen between 9 or 11. Anything outside of those windows, I'm not entering the market. Number two, after that time-based mitigation happened, it has to happen after mitigating a high time frame supply or demand, i.e., these 15-minute levels, right? To me, those were my high time frame supply demands, even though this one right here is the retail supported resistance. But before it was that, it was my high time frame demand. That price ended up changing character, breaking structure from. So, okay. So I'm following the market now. And I'm not expecting the market now to all of a sudden go bullish, but I'm expecting the market somewhere around these areas. So I asked myself, okay, now that this high led to this low, broke this to this low, broke this structure, where would my retracement be in order for me to take my sell? Because I gotta sell from a discount, from a premium. I can't sell when the price is low, from is this low. I have to wait till price come up here for me to sell. So when I did my fib, I see, okay, this is my premium levels right here on this 5 minute time. This is my premium level. What lies in this premium level? The top of this consolidation range, equal high, which you'll see right here. This equal high that price created, because I'm just getting into the market. At this time, I just got to the spot 9:10, 9:15. I'm just getting into the market. So I quickly did my analysis, quick, by because as you see, it's quick to get to the point of what the market's about to do. It doesn't take that much hours. So I said, okay, I have one tap, two tap, maybe the third tap here might be the mitigation. I have this wick, maybe price induced this wick, and I could take my trade in here. So perfect. So this is what I'm thinking. All right, price comes here, give me my trade. Perhaps I could buy up from here, put my stop loss here. And you know what? I'll just target the top of this consolidation. That's all I wanted from the market. Give me that, and I'm going to look to sell from somewhere here within this range. I'm looking for my sell to come down. So let's finish reading this. So number two, we said after the mitigation of high time frame supply or demand. Number three is I need to see a change of character, breakup structure, or a two-leg protocol or impulse candle for me to take my entry. And I look what it says. Highly important to have all three of these together. That's highly important. If I'm missing one of the three, I'm not taking the trade. Highly important to have all three. So let's ask ourselves if we have that. Okay, high time frame demand, check. Time-based manipulation, it's after 9. So if we get a mitigation here, that will be checked. So let me fast forward it so you see the mitigation. Boom. What time we got mitigated? At 9:30. Time-based mitigation, check. After supplier or demand, after a demand high time frame, check, because it's in a 15 minute, it's a 15-minute demand, it engulfed and it led to a change of character and a break of structure. So that signifies that it's a strong demand. What is a strong demand or a strong supply? It's a low that leads to a high that breaks structure, or vice versa, a high that leads to a low that breaks structure. That makes it a strong supply or demand. So I continue. What do I have here? Remember, I said after the mitigation of the high time frame, I need to see a change of character, break of structure, or a two-leg protocol for me to enter. So what did I get here? High, low, low to, high to low, low to high. What did it give me? A break of structure. So I've now have my break of structure. I can enter the market. Where's my change of character? It happened on the 1 minute. So if I go to the 1 minute, my change of character was this high that led to this low that broke above underneath this low right here. And these lows, price came back up, pushed up, and this was my change of character. So I don't necessarily mark it, but for the sake of this video, I'll show it to you guys. This was the change of character. Okay, cool. So now let's go back to our 5 minute. Not to mention, we already had a change of character here in the breakup structure. So the price came back, retested, and did it again. So the momentum is showing me, even though I'm looking for sales, I know that price needs to retrace to some sort of discount range to sell off, for the sell off to happen. So this is where the greed that I'm talking about happened. So because I was chasing this 4R, as you could call it, because I was really targeting above this, because I was chasing this 4R in order to then sell down, because I knew I wanted to sell from here within these range. I know I want to sell here because I know price can come take these imbalances. I see there's a 5 minute OB here, but I'm not expecting price to come this high because our discount, our premium range is within this range. So I'm not expecting price that high. So I'm like, okay, I'll be able to take the sell. And I know that there's this Asia low right here that hasn't been taken. So I'm targeting the Asia low anyways. So I'm okay. This will be a nice 1 to 7. Well, it was a 1 to 9 when I did it. Right here, it was like a 1 to 7, 1 to 8 type of a trade. Actually, it was a 1 to 6. Never mind. It wasn't. It was a 1 to 6. I covered these highs. Okay. So I said, okay, I'm gonna get a nice 1 to 6 if price comes in this range, mitigates me after sweeping the high of this consolidation. We could get a tap here. Maybe price could even reach into the imbalance to take out the zone for sellers and then respect it by right here and then push down. So this is where I'm expecting my sell to come from. I could have just waited, but instead I wanted to take this ride up to take the ride down. That's where the greed comes in, guys. I followed everything in my trade confluence. Every box was met except for one that I did not follow, which is right here at the bottom. You see what it says? Pro trend only. Those are the A plus trades, the A plus setups. There's one thing that I told myself that aligns with my trade confluence I did not follow. And that cost me 6R. So that shows you the importance of following your trade confluences, being disciplined on that. Because I didn't lose this trade based on technical, because all my confluences was there. Look at the liquidity I'm targeting, equal highs, consolidation high, imbalance above, price needing to retrace to then sell off. This was just a slight counter to sell. I was thinking price is bullish. I knew price was bearish. I just wanted to counter to sell off. But that's the greed. I wanted to take more than one trade to make more money. I wasn't satisfied mentally, right? You could say for the 6R. I wanted to add that extra 4R and make 10K rather than 6K. So here we go. Let's continue to play the market. So what did market do? News came. The news came at 10 and dumped the market. Where this whole time price is we're in the trade. Price pushes back up. Now, this is an advice that I'm gonna give you guys. You might know this already. I know this already, but yet I still did not process this. I don't want to credit it to any excuse, but being that I was moving around, I wasn't at home. I was trading from a coffee shop, and during the trading at the coffee shop, I realized that the only way that I could possibly get this trade correct is if I get into the trade and continue with my day. So as I continue with my day, this is what I noticed, right? Because if I was paying attention to what was happening in the market, I would have noticed that we had a two-leg protocol, an easy two-leg protocol to confirm the sell. I would have easily been able to confirm the sell. But simply because I was moving around, doing this, doing that, away from the computer, after I got into the trade, I missed the confirmation that price was telling me, hey, this is where we're going to sell off from. So, first thing first, but I was saying this is the advice I was going to give you. Whenever you're taking a counter trade, because there's nothing wrong with counter trades, but if you are going to take a counter trade, exit the trade at the 50% range, because this is where institutions likes to get involved at the 50% range. So if you're going to take a trade, exit at the 50% range, because that's more than likely where you can expect price to turn around or even continue the opposite direction. So 50% range, not the 6.18, not the 786. You want to exit at the 50% range because that's where the market may turn around. So this is what happened. Had I remembered that, I would have exit at the 50% range. But simply because I did not keep that in mind, I didn't keep that into consideration. I ended up trying to hold price higher. And that's what led to the stop loss. Now, let me show you. As the market continues, right? 50% right here, I could have gotten out. Now, if I was even paying attention, being on my computer the entire time, I would have noticed when price signaled me one leg, two leg, breaking to the downside, letting me know that, hey, this is the moment where we are about to sell down. And even though this wick right here slightly tapped the 618, I still felt like price can come higher. Why? Because we had this consolidation high and we had this imbalance. So I wanted it. So that's the thing. You can't want price to do anything. The market is going to do what it wants to do. You just have to react. So this is where I would have been able to react. I could have exited the trade right here. I could have exited the trade literally at 2.9R, close to 3R, and position myself here for the sell instead, and cover these highs, cover the high of this, and then still get my six R. Why? Because I had one leg, two leg, which is what? Impulse candle. I'm sorry, two leg protocol. This is one of my entry models. What are we coming from? We're coming off from a high time frame supply. We broke structure to the downside. We changed character in here and we broke structure. So the confirmations of my trade confluence were aligned. This is what I called an influx zone. Influx zone where price could have gone either way. Either way was valid. In these situations, you want to go with pro trend. Align yourself with pro trend because that's what's going to more than likely hit TP versus taking a counter. So as you can see, this was the whole trade. This was the reason why I ended up taking a stop loss because I simply did not follow one simple rule, pro trend only setup. Because if I would have avoided that, taking this buyout. I would have waited for price to retrace up, giving me one leg, two leg, and I would have sold the market from up there because I would have gotten my two leg confirmation to sell down. Because I already had all these liquidities to the downside. I had equal lows. I had retail support and resistance. I had all of these knowing that I was in a range where price was going to take the low of the market. And I had this consolidation range right here. Price did a big consolidation right here. It spiked up to the high side and the low hasn't been taken yet. We consolidated all the way through. The high got taken, but not the low. So all my confluences to sell was there. I simply got greedy for that little bit of R, and it cost me the entire trade right there. So I just wanted to share that with you guys. This is a trade that I'm not angry or down about. I'm actually happy because these are the trades where you learn from, because this was not a technical issue. I didn't have a technical issue of reading the market. It wasn't that. I understood that this buy momentum was going to happen, which was correct. I just did not stick to that one aspect of information, which is if you're gonna take a counter, exit at 50%. If you're gonna take a counter, you're gonna go against the grain, exit at 50%. Other than that, we're in this long sell for 6R. Or other than that, I would have closed at 50%, got the trade off, wait for the sell opportunity, took the sell, and we're gone. We would have closed actually before what was it? Before news even happened, we would have been out the trade because we hit 50% right here at 9:45. News was at 10. So we would have been at the trade before news even happened. So that's another thing, because my mind was so fixated on trying to take a trade all the way up to the top of the consolidation range to sweep that level of liquidity first. That led to me being taken out. As you can see right here, the market came down, did its dance, and hit our TP and began to turn around. So this would have been the trade of the day, where we'd have called a 6R. Now, I did have a sell on my personal account that was since up here. I did a swing trade on my live account, my other account. That one was a lower lot size because it was less capital in there, but that one ended up hitting TP because I swing trade that account. It was from up here. So for that one, I'm okay with this trade. Like I said, I just wanted to share this with you guys. I haven't done a video breakdown in a minute. I know I didn't go too deep into the 1 minute drill of inducements, explaining everything else. I will another session, but I just wanted to share this session with you guys because I felt like it was very informational, and I felt like there was a lot more that I can value that can be taken from this. Because as you see, all price did instead when take this high, it just gave us an inducement right here. So that means all this low was valid for was to do an inducement, to fulfill a minor inducement. This mitigation was simply to push price back up, to fulfill a minor inducement, to then push the market back down. And that was it. Inducement of this low to push up, inducement this high, push down. And that was the end of the day. So if you guys have any questions, you want to get more analysis of these types of trades, let me know. I'll continue to do my best to show you guys. I know I've been gone for a minute. I've just been really focused on understanding the market, putting a lot of time in my studies. So I have so much information in gem that I will share with you guys in the future. But for now, let's continue to grow. This is more of a technicals understanding of how I look at the market when I'm entering trades. I also want to share my trade confluences with you all. something that I use when I'm entering the market to allow me to see the market from a clear perspective. As you see here, wait for 5 minute break of structure. You got it here. This low led to this 5 minute high, this 5 minute high led to this low led to this other 5 minute high, and we broke structure. So we've had all our confirmation. Same thing here. This 5 minute low led to this high led to this low, change character. This 5 minute low led to this high led to this low, break structure. So on both sides, we've had every box on our trade confluence list checked off. The only thing we didn't align with was pro trend only setup, and that cost us 6R because we were chasing 4R, and we left the market with -1R. So, anyways, I hope you guys got some value from this session, and we look forward to making some more new sessions for you in the future. Until then, peace.